In this video, we are going to learn about the trade receivables turnover ratio. Trade receivables turnover ratio is a relation between credit revenue from operation and average trade receivables. Now, credit revenue from operation means credit sales, and trade receivables, as we know, is a part of current assets which includes sundry debtors and bills receivable. Now, when we talk about sundry debtors and bills receivable, that indicates the firm has made some sales on credit. Now, how to find the amount of credit sales? That is from the total sales if I deduct the cash sales. Also, we can write it as revenue from operations, that is sales, minus cash revenue from operations, that is cash sales. Now, when we talk about the sundry debtors, here we are not going to exclude the provision for doubtful debt. That means in turnover ratio or trade receivables turnover ratio, our sundry debtors will be inclusive of the provision for doubtful debt, unlike we used to do it in the current ratio. Next, average trade receivables is equals to opening trade receivables plus closing trade receivables divided by 2. So why do we need to find out the trade receivables turnover ratio? Just to find out how quickly the trade receivables are converted into cash and cash equivalents. So a higher ratio is considered better because that indicates that debts are being collected very quickly, whereas lower ratio indicates that there is some inefficiency in collection of debts. Now let's start with the practice questions from DKGOL. Question number 61. Calculate trade receivables turnover ratio and average collection period from the following. Total revenue, that is total sales, is given. Credit revenue from operations 70% of the total revenue. Sales return 40,000. The sales return is a part of credit revenue from operation. Opening trade receivables and closing trade receivables is given. So let us find out the amount of credit revenue first, that is 70% of 12 lakh, which is rupees 8 lakh 40,000. And in the formula we need net credit sales from operation. So how to find the net credit sales? That is credit sales minus sales return, which is rupees 8 lakh. Next, we'll find out the average trade receivables. That is opening trade receivables 73,250, closing trade receivables 86,750 divided by 2, which will give us rupees 80,000. So just put it in the formula. Trade receivables turnover ratio is equals to credit sales minus average trade receivables. That is 8 lakh divided by 80,000 is equals to 10 times. And as I have mentioned earlier, all our turnover ratio will be expressed in times. Next, we need to find out the average collection period. Now, how to find out that how quickly the debts has been collected? So, the formula is number of days in a year divided by trade receivables turnover ratio. So, number of days in a year is 365. Generally, we'll take 365. In case the year is mentioned, we'll check whether this is a normal year or a leap year. So here the date has not been mentioned, so we have taken 365 divided by trade receivables turnover ratio is 10. That is equals to 36.5. But see, we cannot write it in decimal as we are finding out the number of days. So rounding it off, we can say this is approximately 37 days. That is, the company takes 37 days to collect its debt. Next, question number 64. Calculate debtors turnover ratio. Credit sales 22 lakh, cash received from debtors 20 lakh 40,000, discount allowed 40,000, sales return 60,000, opening debtors 4 lakh 70,000. Now in this question, closing debtors is not mentioned, and we know that for calculating the average debtors we need opening and closing both. So how to find out the closing debtors? So from all the information given in the question, we can find out the closing debtors. That is opening debtors plus credit sales minus cash received from debtors minus discount allowed minus sales return. So putting the amount in the above formula, we'll get 5,30,000. That is our amount of closing debtors. Now let us find out the average data. So opening data, that is 4,70,000 plus closing data 5,30,000 divided by 2, which is rupees 5 lakh. So now the formula for debtors turnover ratio is net credit sales divided by average debtors. So net credit sales, how to find out the net credit sales? From the credit sales, we'll deduct the sales return amount. So 22 lakh minus 60,000 divided by 5 lakh. That is equals to 21 lakh 40,000 divided by 5 lakh, which is 4.28 times. Next, question number 68. Calculate the amount of opening trade receivables and closing trade receivables from the following. Cost of revenue from operation rupees 9 lakh. Cost of revenue from operation means cost of goods sold. Gross profit on revenue from operation is 25%, that is 25% of sales. Cash revenue from operation is 20% of credit revenue from operation. Trade receivables turnover ratio is 5 times. Closing trade receivables were 3 times that in the beginning. So here neither our opening trade receivables is mentioned, neither closing trade receivables is mentioned, and also there was no sales mentioned in the question. But gross profit is given and cost of goods sold was given. So what we'll do is, let us assume that the sales was rupees 100 and gross profit is 25. So what is the cost of goods sold? 100 minus 25, that is 75. So this is generally what we do in profit and loss sum, if you remember. Now we'll follow the unitary method. So if cost of revenue from operation is 75, sales is rupees 100. The cost of revenue from operation is 9 lakh. This 9 lakh was given in the information. Then sales is 100 by 75 into 9 lakh, which is rupees 12 lakh. Again in the question it was mentioned that the cash sale is equal to 20% of credit. In the question we neither have cash sales, neither have credit sales, nor there was total sales mentioned. So what we'll do is, let us assume that the credit sale is 100. So our cash sale is 20% of 100. So the ratio of cash sales to credit sale is 20 is to 100. So by converting it into simplest term, the ratio will be 1 is to 5. So now credit sales is 5 by 6 of rupees 12 lakh, that is from of total sales, which is rupees 10 lakh. Now let the opening trade receivables be X. In the question it was given the closing trade receivables was 3 times the opening trade receivables, that is 3x. Average trade receivables will be x plus 3x divided by 2, which is equals to 2x. Now putting it in the formula, trade receivables turnover ratio is equals to credit sales divided by average trade receivables. Turnover ratio was given as 5. Credit sales is 10 lakh, we have find it out, divided by 2x. So the equation will be 5 into 2x, that is 10x, is equals to 10 lakh. Therefore x is equals to 1 lakh, which is our opening trade receivables. Therefore the closing trade receivables will be 3 into 1 lakh, that is 3 lakh. I hope you have understood this part. Thank you.